Oh man, guys, I'm starting to feel a little bit like Kathy Wood here with these last few picks, but what just happened, and I know this is a hot question, so Shift Technologies, SFT stock, did us a little bit dirty, and they did something that I almost don't even like saying the word, and that word is dilution. Now, this is something that we see all across the board. Many large companies do this. Tesla did it a few months back. Coinbase did it. Was that this week or that was last week? And right now SFT did it. They are raising capital through convertible notes, which will eventually, ideally for the investor and also actually for the company, will get turned into shares. And those shares are going to be added to the outstanding shares, which dilute your current shares. So basically, whatever amount you owned of SFT in 2016 when these convertible notes will be exercised, you will own a less percentage of equity, so to say. But you could also take advantage of these depreciated current prices to actually end up buying more, increase your equity share, and then it should end up evening out, so to say. What we should do first is actually go ahead and review the news. Check out exactly here what happened. Let me get rid of this disclaimer I was just looking at. It's like, why is it in the way? So here it is. Shift Technologies Inc. announces $75 million in convertible notes offering. Now, what just happened today? So this news came out yesterday, and today, double whammy, they actually increased that right here. So that was yesterday, today's the 25th, to $125 million convertible notes. So now they're raising even more money. I guess they realized maybe they needed more money. Maybe there's really high demand for it. Either way, we'll talk about why SFT, Shift Technologies, did this in a little bit. But first, I want to dive a little bit more into these convertible notes. And then after we talk about the why, we're going to dive into what are we going to do about our investment here with Shift Technologies, because that's really what it boils down to. Coming forward here, $75 million, yada, yada, not so interesting. I did want to highlight this one part here. What are they expecting to do with this convertible note, right? What do they want to do with the capital that they raised? So here it says, Shift expects to use a portion of the net proceeds from this offering to pay the cost of the cap call transactions described above. Basically, this is not the first time Shift Technologies has done this, and there are costs associated with it, especially the interest in the principal when it has to get paid back. So that is one thing from former financing, and that's a little bit why I'm always a little bit nervous when companies do financing, especially if they overdo it, because sometimes companies can't necessarily get out of their financing death spiral that is sometimes referred to. Anyway, so that's first, the refinancing here, or paying financing. The remaining proceeds to pay for working capital, which makes a lot of sense. We'll dive into that a little bit, why their working capital is not ideal. They have a lot of cash, but their profit margins are rough, and then general corporate purposes. So those are the three things. And again, right here, we basically have two convertible note news, right? The first one came out yesterday with 75 million, and the second one, 125 million. Now, this is not two different ones. It's an increase from the additional 75 million. If you guys want to learn more about convertible notes, I actually came out with a whole entire video, convertible bond example, bonds, notes, debt, it's all kind of the same thing, just different terminology. I used an example of Coinbase when they did their convertible note. So if you are curious to learn a little bit more about the pros and cons and what it means for the company, definitely check this out. There are no filings yet on the SEC. So if we come over here to sec.gov, EDGAR, electronic document, gather, archive, retrieval, something like that. I always get the acronym a little bit wrong, but that's more or less what it is. It's their archive system. So here you can see there's no new filings yet. It takes around, you could have, I think, up to 4 days. Yeah, up to 4 days to file an 8K, which is kind of new news, and then an updated perspective. So eventually we're going to be seeing this come out with the SEC Gov, the filings about it. And now I really want to be talking about why did they do this. So let's actually go here to the full camera again. So why did SFT do convertible debt offering? And I think there's a few theories out here. I think the best thing to do is just kind of throw them all out here and let you guys decide. But the first one Arson George and Toby Russell's two of the co-founders. I believe there's 3 co-founders in total, but they have a very low equity holding. And if we come here to Shift Technologies on Simply Wall Street, you can kind of see here on the board members, these two are the co-founders, and they have a fairly low amount of ownership. So if they are diluting the stock, which will be in 2016 is when these notes are going to be converted, then it doesn't hurt them that much because they don't own like 10, 20, 30% of the stock, which at that case, maybe they would be a little bit less inclined to do dilution. So there's definitely that out there. Right now, the company is burning cash really, really fast. There's a nice little article here on Motley Fool that I think has some little good snippets here I wanted to share with you guys. So as of the first quarter of 2021, it had as Shift Technologies, SFT, had 177 million in cash equivalents. You might think, okay, that's actually a decent amount of money for a smaller size company. The problem is their gross profit margin right now is around 7%, not so nice, and then it spends as much on marketing as it made in gross profit. So it's like, ooh, that's a little bit of a red flag, I gotta say. Here, this is a good little part I want to read here as well. Because Shift Technologies is still a low margin business with high expenses, it had a massive first quarter operating loss of $71.5 million. Now they're looking to raise that 125. So it kind of shows they're raising money that lasts them about 2 quarters. That's a little bit of a red flag because then they would have to do another offering, more dilution, and so on and so forth. A little scary here. So while 177 million in cash reserves looks like a lot on the surface, the reality is cash burning is high and could be that way for a while. And that's really the concern here. That's why the company is raising cash now with a convertible note offering. That's what we have to be thinking about. The thing is, in a recent video here where I was talking about SFT, is SFT Technologies a buy, Shift Technologies? I was talking a lot about the car market right now. Used car market is doing very, very well. It's booming right now, and it's a big actually indicator for inflation right now. It's one of the big CPI metrics. So if we come here, let's go back here for a second. So what this company needs to do is raise capital to increase their inventory. So I think this isn't just blindly raising capital. They definitely do have a plan here. And as much as I don't rely on StockTwits to get news or don't like it, there's sometimes really good comments here. I thought this was a good one. Moose here, clearly bullish on SFT, but let's read his comment here, or his or her comment. SFT coming from someone in the auto industry. If you're in a wild car market like we are now, all you think about is getting more inventory. For them to raise this $75 million, now $125 million, just means they understand the car market and they know that they need as much inventory as possible to pump back out to the retail market. Right now, every car that comes in is selling within 24 to 48 hours, and lack of inventory means you're losing out on potential profits. So I agree with this move. They made 100%, and all it's going to do is improve their financial statements and help this company reach the next level. I'm 100,000% bullish on SFT. Okay, that might be a little bit too bullish, but you get the point. Now the question is, what do we do? Because in my mind, there's a little bit of an opportunity cost right now with my investment, because this might take a little bit longer to play out until we see maybe some earnings or whatnot. I always like to give myself at least 8 weeks for any one of my swing trades, which SFT is exactly. The problem is there's a lot of really, really nice swing trades out here right now. Let me actually go back to my trading screen. This is my current account on my IRA. So this is one of my swing trade portfolios, and there's a few that are a little depreciated. There's a few nice ones running up, like IPOE, this SPAC for SoFi. So there's definitely a lot of opportunities, and I'm more of a momentum trader. And right now, SFT is either a great dumpster buy or it's going to continue that downwards trend. And if they keep doing offerings like this, I'm a little bit nervous for that. So that's kind of where I'm standing here on the fence. Now, what I do like about it is 2 things. Their total revenue is increasing quarter annually, which is really, really nice. That makes me really happy. And then also right now, the stock price is actually below where all these insiders were buying. So if people buy, they believe there's going to be appreciation, and if the stock is lower than where they bought, maybe they're going to be buying more. So there might be a little bit of insider buying coming in as well. So that's making me kind of bullish. The problem is, we dropped to an all-time low here on SFT. That's making me a little bit nervous, especially with the big volume that came in on that drop. So a little bit nervous there. Overall, on my trade, I have this open here on TradeRail right now. My cost per average is $8 right now, fairly small position size, so I'm not too worried. I can average down if I want. The question is, do I want to average down or cut my losses and then move on? Right now, it's a fairly small trade. Actually, if we come here to trade, you can kind of see this one. I'm only down around $600 right now. Well, not only, I mean, yeah, of course, I'd rather have that in the green, but I'm just trying to put it in perspective here. So the question is, do I want to maybe average down with another 100 shares, lower my cost per unit here, and go forward? And, on a 20% dip here like we had, I don't know. It's not to the point where I want to quickly cut my losses. I probably would consider averaging down and then look for maybe some sort of rally like this, because all it takes, I think, SFT at this point is a few good PR articles, and there could be a little bit of a rally, especially once day traders jump on, if shorts are squeezing, and so on and so forth. So that's what I'm going to be looking for. Right now, I'm still holding. But you guys will know, obviously, in the Discord, if I do end up cutting my position. That's always where I post it, and that's where I post it, or in this stream, we also talk about it there. So that's my opinion here on SFT. I would love to hear yours. Don't forget to drop a like on the way out. That's everything for this video. If you enjoyed the content, easiest way to support the channel. And then, like always, guys, stay safe and make some awesome trades. Till next time, guys. Ciao, ciao.